All right, let's get started. Welcome, everyone. Yeah, it's been a little while since we've been together. Some of you may be brand new. And first of all, just with a quick check, just so I can make this the most efficient and educational, profitable session for you. Who is new to FX Street? Who's brand new to FX Street? Anyone new? Okay, just want to make sure, I don't want to talk above anyone's head, and we want to make sure everybody kind of gets what we're talking about. Okay, great. Wonderful. So, as you know, what I'll be going over today is live markets. We'll be looking for trading opportunities based on a strategy that we employed Online Trading Academy, which is so attempting to identify where banks and institutions are buying and selling in the market, where the significant buy and sell orders are in the market, so that we can buy and sell there too. We have a kind of short list of rules that allows us to identify those levels. And sometimes they think we can look at gold, absolutely. In fact, why don't we start with gold? Since you asked, ask and you shall receive, right? We'll start with gold. Let's go there, and then we'll get started. Gold futures okay for you? GC? Or are you an ETF trader? Excellent. Wonderful. GC is a fantastic market. Now, if you don't trade COMEX gold, don't just jump in and start trading it. It's a very big money market that really moves. Okay, this is $100 a point, so be careful with that. So a couple of things before we dive right in, though. Just make sure you understand that the strategy we are going over here today in trading is applicable to any and all asset classes, stocks, futures, and Forex. Any time frame. So very small time frames for that short-term income, very large time frames for that long-term wealth. Okay. I'm going to try to read that real quick. Gotcha. Good question there. So I think I understand your question correct. So it really comes back to when do we actually say that is a level? So I think one good rule of thumb you want to use for that, let price leave the level at least twice the distance of the level. So let's say a level is, 10 pips wide. Ideally, you want to see it move out of that level at least 20 pips before it comes back. What that does is two things. It really opens up that initial profit zone, right? It shows you what your first target is. Or I should say it shows you what your very easy and attainable first target is. Now, what you might want to do, if you're okay with fewer trades, but higher quality trades, higher probability trades, let price leave the level so you have that 10 pip range, let price move 30 pips away. And then after entry, take profits at 2-to-1 at 20 pips. Now your winning percentage should go up a ton. Make sense? In other words, whatever you're looking for, make sure the chart is offering you more than that. Yeah, we've got an example right here. I'm sure we'll have examples in gold. Let's take a look. We're always going to start in a larger time frame with anything we do, real quick. So if you take a look at gold, this is a weekly chart. We'll go over this real quick, and then we'll move to the smaller time frame. But it's important to understand that now gold has some supply, not too far above on this chart, but you'll notice that the fresh demand level in gold is significantly lower. If you get the articles, lessons from the pros, and so on, I put this chart out there a couple weeks ago. There we go. So we've got some fresh levels below. Let me show you where the nearest level is above. We've got more. Now, there's two reasons why it's important for you to do this. Go to the larger time frame first. Right? We want to quantify real supply and demand in the larger time frames first, simply so we know where we're at on the larger time frame supply demand curve. Should we be looking for buying opportunities, selling opportunities? Okay, so as a long-term trader, these are basically your opportunities coming up. But as a short-term trader, now I know that, you know what, we're closer to supply, farther from demand. As we get close to that supply level, I want to be looking more and more for shorting opportunities, not long-term, but short-term. You can see over the past couple of weeks, because we're closer to larger time frame supply, you're better off betting to the short side on the small time frames. The chart tells you that. So for those who've been with us for a while, so for those who've been with us for a while, you know, we've been pretty bearish in gold for quite some time, and that's what the larger time frame looks like. So there's the supply-demand curve in the larger time frame. Adam Smith would say, sell up here, buy down here. Actually, when he wrote about, you know, the wealth of nations, that's really what he was talking about, was gold and silver, right? So now that we know that, let's move to the smaller time frames. But now we know what to do and what to look for in the smaller time frames. We know whether the longs or shorts are carrying the odds. So let's go to, no, these are both, I call these both fresh up here down, but since they were created, we have not had a pullback yet. Okay, so let me just go to I'm actually going to jump right down to a 5-minute chart. Well, let me actually do this. Quick peek here. Yeah, so this area here is going to be, notice where price is at now. So we're at 1281, 1282-ish. But notice when you look to the left, we've been here a number of times. Okay. Notice price didn't stop here. It shouldn't. Well, it did for a little bit, but then fell. This is not a fresh level. This is a pullback into here. Right now at 1282, we're just pulling back. We've been here a number of times. However, down here, this is, again, we're still in a very large time frame, but this is a strong area of interest. So this is where we would expect prices to, we'd expect a significant bounce higher. I'm not saying this is going to reverse the big trend, downtrend or anything, but here we would expect a significant bounce higher. Sitting just above on this time frame, our nearest area of supply is going to be right here. Now from here, we'll be able to go down and get short-term trading opportunities. That should be pretty easy to do. Okay, so again, even in this time frame, we're a little bit closer to supply than demand. And there you have it, 240-minute chart, 4-hour. Great time frame to look at. There's nothing magical about these time frames. It's just X-ray snapshots. Okay, so now I'm down to a 5-minute chart. Let me just go to a 10-minute, clean this up a little bit. So, some actionable trading opportunities not far from current price. We're going to go right here with this level. And I'm going to go and check it out on a little bit smaller time frame. Just one. The other thing that concerns me is this wick over here. So I want to check it out over here real quick. Actually, let's go on to the 5-minute here and take a quick peek. Okay, so you see inside here, price is able to go up to this area. All right, so because of that, I'm going to move this up a little bit. Let's go right up here. Again, this is not typical. Okay, so now, what I want to see is that when price was in this range, there's a lot of white space or yellow space, whatever you want to call it. Okay, I want to see that when price was there, you really had hardly any trades go off between 1286 and 88. Does everybody see that? There are specific rules to this. Obviously, we've gone over those before. Not enough time to go into them today, but one of the key things is I want to make sure that when price was in this range, so price spent, let's see, 10, 20, 30, 40 minutes in this area, the 1286 to 88, but during that time, very few trades were able to take place between 1286 and 88. Why is that? FT, that could only help you. So yeah, go ahead and do that if you want. I use volume charts. Yeah, because there's a ton of supply up here. Some institution, someone with a lot of money has a lot of orders to sell here. Did they sell all they wanted to sell? Did they get the whole order off? No, we know that, right? Okay. So watch for that. Okay. So knowing that, who in their right mind would put a buy order right up here where I'm pointing? Someone who makes money or someone who loses money? Right. A novice trader, a newbie. That's who you want on the other side of your trade. You don't want Goldman Sachs on the other side of your trade. You have, you want a new trader, someone who doesn't know what they're doing. Again, I know it doesn't sound nice to talk like that. I apologize, but that's how the world works, unfortunately. Leonard, no, I feel pretty good. I had a little nose that you going this morning. Sorry about that, if that's what you're talking about. The only thing I would watch for here, anybody's looking at this one, just make sure that when price comes up here, see how it's rallying now, that's ideal. You want to see a strong rally like that into this level. Could this turn at 12.85.75? It could. So watch for that. Because it's a strong level, looks like a decent level. If you're going to enter at 12.85.50, for example, because it may not get up to the black line, I would just reduce my position size a little bit and keep the risk in line. Okay. That is the near-term opportunity in gold. Yeah, so your best trading time, especially for the equity index markets, we can go to the TF right now if you want to. Yeah, Sandor, instead of saying it like that, you're correct in what you're saying. But I think a better way to do it is just keep the time frames relative. So don't just, because you took a trade on a 5-minute, don't just only look at a 5-minute chart. Go down to a 2-minute chart and take a little X-ray snapshot of the area. Make sure remember with all the odds enhancements with gold, make sure structurally it's a sound level. Make sure it's well placed on the supply demand curve. And you absolutely need your, a significant profit zone, at least 2 or 3 to 1. Okay. Let's look at TF here. That's the Russell. Obviously, pretty big drop over the past day and a half. No, Sandor, great question. If you're only trading a large time frame, look, at Online Trading Academy, we have tons of students. Probably half the students have no interest in short-term trading. They just want to do longer-term stuff, which is great. But no, you don't have to look at small time frames. Right? There's a little more work being that short-term trader for that daily, weekly income. That you have to do a little more work. There's more time frames to look at. If you're doing the larger time stuff, yeah, no issue. Okay, let's look at the Russell here, and I'm going to, let's make this chart a little bit bigger. Well, let's start with the 45 here, we want to see what we're falling into. Ooh. I'm just going to put a box around this real quick. I'm not saying this is a great level, but from this time frame, it appears to be good, but there's a couple of things we have to look at first. I don't know, I want to see exactly what time this level was created, and we want to go down to a smaller time frame. So keep an eye on that. So we're getting dangerously close. This looks great just below. So I'm going to put some levels around these, and then we're going to go down to the smaller time frames and look. Now, this Russell, my guess is the S&P and NASDAQ have almost the same level, and DAX. Out of all those, not a big deal. I kind of prefer the DAX, but not a big deal. So your short-term trading levels, like we're looking at, down to those, 5, 10, 15, volume tick, anything created between, I would say, 5 a.m. to 9 a.m. Central Standard Time. That's when institutions and banks are most active. Well, much closer to that 9 a.m., but that early morning. No, so let's go down and look at a smaller time frame. We want to look at the TF. Okay, so let's do our little X-ray snapshot. Let's go down to a 10. I mean, if this level looks really good here, it may be, garbage when we look at it on the 10. So let's go back to, here it is. So it's this. It's not horrible, but I'm probably not going to take it. You'd have to take this part right here. The lower level is the textbook level. The reason why I said on that chart on the left that it may not be great, because if you look at it, you rally all the way up here and then go down and up. See when you look at it, take an X-ray? Right, price goes up and then down, bases and takes off. You got to make sure you've got the logic out. If there was so much demand in this area, why was price able to decline, while it was there? Now, about a pretty small time frame, so it may not be that big of a deal, but there's so much demand up here, how is it the price is able to trade down here? Well, the fact is, it wouldn't be able to trade down there. That's why the level we're looking at is down here. This is where price couldn't go any lower and demand exceeded supply. That's why it took off from here. That's why it stopped falling from here. Right, for those of you who've been with us for a while, this is not a typical looking level. However, so this one below, much better. And make sure now looking at that chart, we're gonna do it like this. I'm going to start the level right there. Notice the origin of the move is right there. So this is where the meat of the activity is. Okay. Yeah, drop-based rally is okay, because you have a rally-based rally also coming right out of it, which is ideal. Now this bottom one, I would expect prices to turn, pretty much at the line. We would not expect prices to go deep into this level. Okay, put this chart back. We'll watch for that. And we'll see if price can get down to that upper level. Very early in the day still. Also too, anytime I see a drop like this, I'll always go down to a little 1 minute chart. Usually these levels during the drop or even they kicked off the drop, you'll get real tradable bounces from there. You're risking a point. 2-3 point profit is great. Okay, just want to take a quick look there. Okay, yeah, we can look at the Aussie dollar. Did you want to look through the, Mohammed, did you want to look through the futures or the spot? Doesn't matter to me. Yeah, it looks like you're typing in the spot. I should have seen that. No problem. Whoops. There we go. So, larger time frame, okay, just so we see where we're at. Now, I'm sure a lot of you have looked at this for a good month now. The Aussie dollar has been sitting, it's fallen pretty quick because there was nothing to stop it from falling down to this area, which is the origin of this rally. Okay. Yeah, so if I go to the monthly, it's really just stalled out for the past couple months right at this level. We would expect that, right? Notice again, you see this every chart we look at. Prices fall, and they barely hesitate here because this is not fresh. Most people look at these levels as demand levels. They're not demand. These are pivot lows into the demand to the left. So we expect prices to fall right through that and stop right here. But most people's eyes are not trained to see that as demand. Mohammed, it looks like you noticed that, which is great. Okay, so now we want to go investigate this level better. Let's go down to, yeah, at least a pause, sure. But now we want to go down to a smaller time frame to see if that pause is going to fit into a rally. Weekly chart says no. Daily chart, I'm going to do this. I'm just going to put a horizontal line right on the low. Kind of blow this up and look left. So this is where our price is turned at. Again, we've been back to this level already. So this is kind of the second time back to the level. So let's scroll right. Yeah, it doesn't look great. But could prices rally? Sure, they could rally. We want to go inside this, but because you're not turning at like you're pointing out, you're not turning at a significant demand level, and we're in such a strong downtrend, I'd probably expect this downtrend to continue, but I'm on a daily chart. So you see these big red candles on the daily? Now I want to go down and look inside those candles and see if there's any supply inside there that I can short against. My guess is going to be there is. So let's do that. On the 240-minute chart, so those big red candles that just look like giant red candles, look at the 240. You've got fantastic supply level sitting just above. Before I put them in there, though, let me just take a little X-ray snapshot. Let's see which ones are fresh. So this first one looks good. This area up here does not look great. That area on top looks the best, obviously, but we're not going to get there anytime soon. So this level looks good. This level up here, not great, and I like that. Obviously that one, and here's your outstanding level up here. And then, of course, the rally base drop on top. I'm not going to spend time on it because we're pretty far from that. So this level looks fresh right here. Remember, this level, when we looked on the smaller time frame, this is not a fresh level anymore. There was a level in there, then there was a retracement, and then it fell. So once you go through this bottom one, I kind of leave it alone. Then we've got our levels up here. So we'd expect turning points. Each of these, so far on the chart, the target here would be about 89.30. There's a 30. Where I get that 30 from is you see this demand, move over to the bottom left. Here's where the demand is below current price. So to safely go above that 89.20-ish, I'd go 89.35 with the target. We want to get out before that demand level. So there's 35 right there. I'll make the target a blue line. And we'll check this trade next time to see how we did. That should be a touch higher. There it is. Okay. Bottom level, 90.28. Top level 90.48. Would have stopped 10 pips higher. Now, this is a giant time frame. This is a 4-hour chart. To some people, it's a giant time frame. To others, it's not big at all. It depends on your short-term trading, longer-term trading. Anyway, that's the trade. So we'd be looking to potentially enter right here. That line, stop the red line, blue line's target. Selling at retail prices, buying at wholesale prices. Buying at the 89.34, good question there. I would not. This whole 89.20, 89.30 area here, this is all a pullback into this. There's nothing real fresh down here. Nothing that I'd be comfortable, putting my money at risk at, if that makes sense. So there's a 240 right there. Okay, let's take a look at JY. All right, there's the JY. We're back. Boyke's back. How you doing, Boyke? Let's see. Yeah, if you have any specific questions, you can always shoot me an email, Boyke. I'll put my email just in here for you. There you go. Yeah, don't sound like I see your question there about not telling all and what's your benefit. You know, believe me, when I'm talking here, the last thing I'm doing is filtering what I'm saying between. My brain is not smart enough to be talking to you like I'm talking to you and thinking, all right, say this, don't say that, hold this back, give them, this. Believe me, believe me, I'm not smart enough to do that. I'm just, I'm actually going over as much as I can. I'm also well aware after years of doing this that, it's difficult in 45-minute sessions to, be able to get everything there is to get. Yeah, so believe me, there's no filtering process, Boyke. Do some people from FX Street sessions join the XLT, the trading room? Yeah. Do other people not join it and still get this? Yeah, I get emails from people that say, you know what, listen to all your FX Street stuff, and they email some questions, and they get it, and they make money, and that's great too, Believe me, there's no sophisticated filtering process with information. Just do the best we can. But I know you've had that question quite a bit for a few years now. So if you have any specific questions, go ahead and email. All right. But believe me, there's nothing I would like better. There's nothing I would like better than for you to send me an email with some statements showing me that you got this and you're consistently profitable just from these webinars. I would love to see that. So anything we can do to get you there, that'd be fantastic. All right, let's look at the yen. So larger time frame. We've got the supply level here. We were here once recently, less than a week ago, fell hard to the demand. Now we're rallying back up to that level. So be careful thinking that this is just an easy short. So be careful getting sucked into that trap. You see on the daily, it looks like it's just a simple short from here. But then, when you go down to the smaller time frame, look at this 45-minute chart of the corner. There's a very fresh, very high probability demand level sitting right below. Okay. Right. So fresh demand level below in a smaller time frame, not a fresh supply level above. Typically, price ends up going higher. And because everybody's getting, a lot of people are going to be drawn into thinking they should be shorting here, that actually helps prices go higher. Okay. Yeah, and Walker, that's kind of what I'm getting at now. It looks like it's a simple short for most people. And yeah, look at the smaller time frames. You're probably going to get a drop in price here. But likelihood of a big one is not strong. Okay, let's go down and analyze that whole area on a smaller time frame. So again, we've rallied up to an area where we've been to a few times, very likely to cause prices to decline. But if and when prices get back down to this area right here, some of it, we want to remember when we're drawing our lines, we want to make sure that we get the origin of the move. the origin of the move. So now I'm not putting my line up here. This price didn't take off from up here. That's not where the imbalance is. That's not where the orders are. The move starts from down here. Now notice in this yellow area, again, this is a Japanese yen, pretty huge market, dollar yen. How is it that when price was here, you know, trading in this range, in this area, hardly any trades took place down in this yellow or white space? Again, just think the logic through. Why is that? Big supply and demand imbalance. Okay. All right, so that's the logic there. At the same time, you have fresh demand below, like you said. You've been knocking away at the sell orders above, filling those orders, absorbing those orders. So we would expect price to turn higher. Of course, you'd have our stop just below the area. On this one, again, 5 to 8 pips is probably plenty. And you'd be looking for at least 2 to 1 to the first target. Just reading back in the chat. Okay. All right. All right, boys. So I don't know if I answered your question, all right, but yeah, you're giving me way too much credit. I appreciate it, but you're giving me way too much credit. I don't have that magic filtering process between what do you give what do you go over in a webinar, or what do you not go over in a webinar? You know, the other thing too, I think people think that there's this magic secret sauce once you take a course or join the trading room. But, you know, the biggest benefit to the trading room, as you bring it up, is it's that hand holding, you know, multiple times a week, you know, in the trading room, applying the strategy. That's probably the main thing. Okay. But I'll tell you, real quick, one thing I've really found helpful over the years is, you know, the more you go over this, the more, there's a lot of smart people out there. There's a lot of people out there quite a bit smarter than me when it comes to a lot of this stuff and automating and stuff. And, you know, people come back with tools and ideas that have really taken this, you know, what we talk about here to the next level. So it's great. One of our top instructors now started out as an FX Street member, then became a student, now is our most sought after instructor, who also helps me, kind of my right-hand guy with a lot of the content we write. So, fantastic. Jose Blasco. He actually lives in Spain. And FX Street, you know, obviously is based in Barcelona. Okay, let's keep going here. I got a little sidetrack there. Next market is going to be, I've just been following your lead here, so, all right, Euro Pound. Let's try Euro Pound. Oh, Walter, yeah, the DAX, one of my favorites. Let's look at Euro Pound. Weekly chart, pretty high on the curve. You know, yes, we're into an area where we've been to before, but boy, there's a lot of stuff up here. It's going to be tough for this market to, you know, continue higher at any sustainable rate. There's plenty of, well, I shouldn't speak too soon. Let's see what's below. Maybe it looks like there's a lot of stuff below. We have to go take that X-ray snapshot to see if there's actually room below. Are there fresh levels below or not? Probably the most important thing you need to, you know, figure out and analyze is where are the fresh levels. Like looking at this chart, there's 2 clear fresh levels, one above, one below. Actually, you know, where are they? Yeah, and you know, this is not the best pair to trade. I agree with you, Leonard. I don't trade this pair either. But okay, so again, you should be able to look at this chart and very quickly get to a point where you say, you know what? There's the fresh supply above. There's the fresh demand below. There's actually a little level right here, but I don't know that it's 100% fresh. Now, look, this drop-based rally, levels like this are outstanding, but this one already had a pullback. and this drop-based rally here already had multiple pullbacks. Okay, drop-based rallies, rallies-based drops, fantastic. But you're going to notice after almost every one is created, drop, base, rally, you get the quick pullback, now it's done. So I can't use that, just like I can't use that. Forward scale, yeah, that's a good idea too. So we'll watch that level up here. We just put these lines in just to make sure this is fresh. Whoops. And here is that one. This level down here is fine, but okay. Let's yeah, so good question there, DH Rue. So for that short-term income, I'll tell you exactly what I'm doing. And some of our really strong instructors, traders do this as well for that short-term income. We're trading the futures markets, which includes the Forex market, in that early 2 to 2.5 hour window, U.S. time. Okay, about an hour, hour and a half before the New York Open, to about a half hour to an hour into the session. That's for the equity index futures, the bonds, Forex, any of them. So you're looking at small time frames and plenty of opportunity every day. If you look back on the Mastermind Community Supply Demand Grid, let's see, so now the last 18 days, about 7 out of 8 trades that need entry in there go on to achieve targets. Anybody here in the Mastermind community, you already know that. But it's all. But my point is, almost all those trades are meeting entry in that 2 to 2.5 hour window. So that's for that short-term income. The long-term wealth side, stock options. Okay, but core strategy, 100% core strategy, like we're talking about here, using options around larger time frame levels. Pretty much selling options, selling premium around big picture levels, doing it in the form of a credit spread, sometimes taking that credit to buy a call or buy a put. Make sense? Those are the two, those are what we're doing. So the two main things we're doing. Short-term income, long-term wealth. Sherry, no. No. Go back and watch some of the videos if you have a chance. I think you'll get it. If not, certainly send me an email and ask some and just shoot me a question. Let's see here. Let me just read back for a second. Let's see here. So a checklist, yeah. So in some of the webinars, and we actually go over a little checklist. The checklist should include, obviously it's all about object answers, but there's two components to this, right? To finding your levels is one part of it. So, and that's structure, so that the object answers are on a level. How to price leave the level, how to spend at the level, profit zone with the level, is it a fresh level? Those are all things on that checklist. We go over that here quite a bit. The second is location, 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 right? Where is that level that you're looking at with regard to the larger time frame supply-demand curve? So, say 5-minute demand levels that you find that are really far down on the curve at or near larger time frame demand, theoretically, and I will sometimes, and people will, you should probably consider risk, taking on more risk on that trade because the odds are so much more stacked in your favor. You do what you're comfortable doing. You know what I mean? Okay? That makes sense? So, go over that checklist. And a lot of that's in the webinars there. Okay. Let me move this over here. And, we are working on an online course that we will probably offer with FX Street, very low price point, very low price point. So, we'll get back to it. And again, it's not to say we're only giving you some of the information here. We'll give you more in the class. We've got 45 minutes together. That's all. So something where we can spend quite a bit more time and focus and all that and get a workbook. Much more on that another time. So anyway, I know we're out of time here. I tried to go over as much as possible as far as detail, and I think actually, thanks to your guidance on what markets we should look at, we actually found some good trades. I'm going to be watching the GC for sure, and hopefully that was helpful. I'll shoot my email address in here again. It's good to see everybody again, and have a great day. Thanks for your time. There it is. There's the email address. All right, have a great day, everybody. We'll see you next time. Thanks.